We're here today to talk about instant payments. I'm joined by Gill Byrne from BPFI and Tony Smith from KPMG. So we've got a whole bunch of stuff to talk about, so we'll just get straight on. Gill, do you want to tell us a little bit about yourself?
Absolutely, thanks a million. I'm Owen, delighted to be here. So my name is Gill Byrne. I'm the Head of Payments with the Banking and Payments Federation Ireland. We are working with our retail, international and payment providers in the Irish market, all of our members on the SEPA Instant, programme or piece of work. I've worked in the payments industry for the past maybe close to 20 years across retail banking primarily in various payment related programmes. So delighted to be here, thanks.
And Tony?
Great to have you here, Gill, and thank you, and lovely to be here. I'm an Associate Director with KPMG. I work with the management consulting practice. Prior to joining KPMG, I've not quite as experienced as Gill, but around maybe 15 years industry experience across traditional banking and fintech as well, both from the technology side of the house and the business side of the house. So great to be here today.
That's excellent. Pleasure to have you both here. I think it's going to be a really interesting discussion, right? So, Tony, I might start with you. What's all the fuss about, right? We've been able to do payments for a long time. Tell us about SEPA Instant Payments and what's going to be different.
Yeah, absolutely. So, I mean, the European Commission have been working since the introduction of the euro currency back in 2002 to support the European payments landscape in Europe. So that started off really with the launch of SEPA Credit Transfer back in 2008, and that allowed participants operating in that scheme to send and receive euro payments all across Europe. Before that, there were individual national legacy payment systems, and it was very expensive. It was very with a high time cost as well to make those payments. So SEPA brought about real improvement, and that was augmented with the release of the direct debit scheme in 2009. And then in 2017, for the first time, there was an instant payment scheme, which is a voluntary scheme as distinct from the others. So with the instant payment scheme, it allows up to €100,000 to be transferred anywhere within Euro within 10 seconds. And not only that, but it allows it 24 hours a day, 7 days a week, every calendar day of the year. So from an end customer perspective, day or night, they'll be able to send and receive instant payments.
That's brilliant. And Gill, your role in BPFI, this is about bringing this value right to our consumers and businesses. What does this mean for them?
Absolutely. So we work with all of our members, all PSPs, both retail banks, international banks and payment players across the Irish industry. And firstly, I suppose to say that instant payments is an important building block for the future of pan-European payments. From a consumer perspective, it offers many benefits, but if we start from a consumer perspective, we publish on a quarterly basis a payments monitor. So that payments monitor consistently with data, I suppose, received traditionally from the retail banks is showing customer preference for quick, frictionless payments. So from a consumer perspective, their preference is instant payments. So it's meeting, I suppose, the needs, demands and expectations from their perspective. I think as well it'll help customers in the environment that we were in budget more effectively and efficiently, given it's real time. It'll pave the way for innovation, and from a consumer perspective that will mean that there'll be more kind of opportunities or solutions that I can use when I'm making payments because they're instant. From a business perspective, similar, but it's more so in terms of the cash flow. So include improved cash flow, improved kind of liquidity management on their cash positions, and it's an improvement or an opportunity to avail of improvement in processes from a treasury perspective, invoice perspective, reconciliation perspective, just because payments are happening within the 10-second process, it just allows for opportunities. I think we've mentioned it, but it's probably useful to say that 13%, I think, as per the latest data from the Commission, 13% of all payments across Europe are processed as instant payments today. So a low probably uptake, with maybe 62% of all PSPs adherent to the SEPA scheme. The Commission's intention and the reason behind this mandating is to make instant payments the new norm. And as I said, from the opportunities that I've outlined, I think it will. Their opportunities will be plentiful.
So Jill, that's really interesting. Right, there's loads of opportunity there, but perhaps I'm a bit confused. Why now? We're November 2023. Tony, you talked about this being around since 2017. Jill, you talked about 13%, sort of take up. What's changing, Tony, that makes this different now?
Yeah, you're absolutely right. It's a great point, Owen. I think 12 months ago there was a lot of work done by the European Commission where really they acknowledged that there was an underwhelming lack of uptake in the optional scheme, and 6 years in they wanted to understand why this is. So in terms of the underwhelming uptake, as I describe it, and as Jill referenced, it's a little over 1 in 10 payments today, euro payments, that are actually sent as an instant payment. And when you look across border payments within the Eurozone, that number is even less. So I think in order to drive up the volume, to help it become the new normal, as Commissioner McGuinness alludes to, I think this legislative intervention is a welcome move. We have also seen in some jurisdictions across the Eurozone some practices which have been a little detrimental in terms of adoption and giving adoption that uplift. In some member states we have seen where there have been fairly hefty costs associated with sending an instant payment, up to €30 in some cases, in fact. We have also seen inefficient sanction screening, and this really harks back to legacy SEPA credit transfer, batch processing Monday to Friday, 9 to 5, and taking this technology, applying it in a 24/7, 365 environment, instant payments, which is high volume, low latency, has to be done very, 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 very quickly as per the scheme rules. And it was the inefficient sanction screening piece that was really causing quite a number of failures. 1 in 10 cross-border payments, in fact, were failing because of the inefficient sanction screening, and the overwhelming majority, 99.8%, were because of false positives. So this is a really welcome move, putting clear parameters around which the European payments landscape, from an instant perspective, is going to operate going forward.
Jill, I guess sort of looking at this, the way that this instant payment might work, that you need a sender and a receiver involved in this relationship, getting that up and running, is that perhaps the reason why we're not seeing the uptake so far?
I think that's certainly one of the areas that the Commission, I suppose, are trying to address by mandating instant payments, because it's probably I've documented that the adherence rates, I mentioned the 62%, that's across Europe, and the adherence rates in Ireland would be kind of considered lower than the norm. Because of that key point, Owen, it's both the sending bank and the receiving bank have to be adherent to the scheme in order to send a payment, an instant payment to and from. So yes, I think it was considered certainly a barrier to increased adoption from the Commission's perspective. And that probably leads us into maybe giving an overview of, there were certain kind of barriers to the increased adherence rates, and the Commission sought to address them in the way that they mandated or in the way that they published the legislative proposal.
Thanks, Jill. Tony, are there any other barriers in the marketplace that have really sort of prevented a quicker take-up?
Yeah, absolutely, Owen. So, Jill's point is absolutely right. And in addition to that, sender and receiver both needing to be operational on the scheme, the other contributory factors have been the high cost of instant payments in some member states, which we have seen to be as high as €30 per transfer. We've also seen an increased perceived risk, certainly, of fraud with an instant payments, because it's irrevocable. You know, once the instant payment has been delivered, that money is in the receiver's account. Unlike a SEPA credit transfer, where there is a window of opportunity to recall the funds, to cancel the credit instruction before it settles with the recipient. And then finally, another of the big drivers in this space has been the inefficient sanction screening, where the batch processing environment sanction screening model has been used in an instant payments environment. It hasn't been able to complete within the time frame of 10 seconds, which is very short, and that's certainly been a contributory factor as well.
Very good, thank you. So, Jill, this legislation is landing. What does that mean in terms of, obviously there's a benefit to drive up take-up, but what might it mean in terms of changes that organisations need to consider?
So the legislative proposal, as published on the 26th of October, kind of covered 4 key areas. And really, as Tony and I outlined kind of briefly before, there were a number of barriers to perceived by the Commission to the uptake. And that's the way that they have, I suppose, published the proposal. They've kind of addressed those 4 key areas. One is on the sender and the receiver side, is mandatory uptake. So that will mean, by the timelines outlined in the proposal and agreed in the final legislation, which we'll probably talk to a little bit later, it'll mean that all payment service providers or all PSPs that offer regular credit transfers, regular SEPA credit transfers today, will be mandatory. It'll be mandatory for them to offer instant SEPA transfers. It'll be mandatory for them to offer instant SEPA transfers on all existing channels that they offer regular credit transfers. So on their online banking, be it personal and business channels, on their mobile banking, in their branch, not in Ireland now, but there are a number of banks across Europe that offer the ability to make a regular credit transfer on an ATM. That is in scope. So it's on all existing channels. If you offer it, you're mandated to provide instant payments as an option to your customer, be it consumer or business. The other aspect is in terms of pricing. So Tony spoke about some member states used the SEPA Instant proposition as a kind of considered premium service and charged for that. So in order to address and I suppose prevent that from happening, the legislative proposal is capping the price of a SEPA instant transfer. You cannot charge more for an instant payment than you do a regular transfer. The third element is around fraud. So it's probably the customer or the consumer protection element of the proposal. It's a mechanism to add friction to the journey with the sole purpose of protecting the consumer. What will be mandated is a name and an IBAN check before a payment is authorised. And what that means is if I am sending you a payment on my mobile banking app, I have your name and I have your IBAN. I will, before I authorise or authenticate that transaction, that message will be sent to your bank. Your bank will check the actual account name that's held for your IBAN. They will send a message back, and before I authorise the payment, I will see as a consumer or a business making a payment that name matches the name that's on the actual account, does not match, or it's a close match. And then I, as the consumer or the business making the payment, has the ability to make the decision to continue and authorise the payment or to abort, obviously, which you would hope they would do if it wasn't a match. So it's a consumer protection element. And then the final aspect is on the sanctions piece. So as Tony outlined, there was a high rate of false positives, and that basically means that a lot of transactions were stopped in that sanction checking process when it wasn't an actual hit. So in order to prevent that happening, the legislative proposal says that all banks, instead of checking each instant payment transaction that's sent out the door, they need to once a day check all of their customers, so check their client base to confirm they're not on that sanction checklist or that sanctions list. And therefore, every SEPA instant transaction that's processed doesn't need to naturally go through that sanctions process, and therefore it'll reduce the, I suppose, challenges around false positives. So there's kind of the four key areas: mandatory uptake, the pricing element, the fraud aspect and consumer protection, name and IBAN matching, and the new sanctions process. So that's probably it.
There's a lot in that, isn't there, Gill? So I know you've been working as part of your role in the BPFI with all of the institutions that are in scope, and I'm sure having some clarity as this legislation becomes real, makes it much more understandable for everybody in what they need to achieve. What's the timelines feel like?
So the 26th of October was when the legislative proposal was originally published. It's going through the various stages in Brussels in terms of before it's finally published and in law. And we know that on the 7th of November, the EU Commissioner Mairead McGuinness announced that the trialogue negotiations concluded. And what that meant is the Parliament, the Council and the Commission were together discussing and agreed what the final text would look like. We know that don't have the final text yet, but there were probably three key areas that we are aware of from that agreement, and which is important to answer your question on when you're going to see this. Number one was timelines. So the initial proposal outlined that it should be 6 months for mandating that uptake for receiving SEPA Instant Payments. And it was originally 12 months for all PSPs to implement the name and the IBAN check and to be able to send instant payments. So it was a 6 and a 12-month timeline in the initial proposal, but we know following the conclusion of the trilogue negotiations, the timelines are now 9 months for receiving instant payments and the new sanction process, and it is 18 months for sending and the name and the IBAN check. So what's really key is understanding they're the timelines, but that's only when the legislation is published into law and in the official journal, and 20 days later takes effect. So it's likely that will be Q1. It will take a bit of time to go through the lawyer linguist phase, and it'll also have to be translated into 20 plus languages. And as I said, 20 days later, it will be published into law. So the earliest that can happen is probably February. And then 9 months later will mean October 2024. All PSPs will be mandated to receive instant payments and have the new sanction check process in place. And then 18 months from, we'll say February, is July 2025. And all PSPs will be mandated to have the ability to send instant payments and to have that name and IBAN matching check.
Just curious, those timelines seem to have extended a little bit. What's behind that?
I think, to be honest with you, it's probably fair to say that overall, and I've mentioned the opportunities and the benefits that instant payments is going to bring consumers, businesses and PSPs, the industry as a whole, the pan-EU payments market. But the significance, the scope of instant payments and all of the requirements that are contained in the proposal that is soon to be law is significant in scale. So the original proposal of 6 and 12 months was very ambitious, I think it's probably fair to say. It's something that our members and BPFI advocated extremely heavily in both domestically and at an EU level in order to allow for more time to be able to implement this effectively. Because the changes to the processes, as you said, Tony, moving from batch processing to real time is a significant uplift and change to processing, to reconciliation, to infrastructure. So most certainly a welcome addition. But that being said, 9 and 18 months is still quite a lot to fit in within those timelines as well. So.
Thanks, Gill. Sounds like a lot to do, right? So, Tony, do we need to wait until all the text is published and we know exactly what needs to happen, and do we know who's in scope and out of scope? Should people be getting on with it?
Yeah, I don't think we need to wait until the final text. I think it will certainly act as somewhat of a trigger in terms of moving it along. But in terms of where we've come from, in the early days, the legislation had in scope payment service providers, and out of scope were the credit unions, payments institutions, e-money institutions. That's evolved over the period of time that this process has been going through Brussels. And now the Settlement Finality Directive has been updated. So actually in scope for this legislation is the likes of the payments institutions, credit unions, on post, e-money institutions, and so on. And I think with that clarity is an opportunity for all of the above mentioned parties to start planning now. Because while the timelines have been extended from initially 6 months out to what is now 9 months, they're still very challenging timelines. And when you consider the migration from a Monday to Friday 9 to 5 type environment into 24/7, 365 type environment, where you won't necessarily have the same levels of support, there might be increased levels of operational risk, etc. In those sort of out of traditional business hour times. I think it's going to be really, really important to get your ducks in a row, to get that planning put in place. We would estimate from what we have seen from a European Payment Centre of Excellence, we have seen that the vast majority of the work is actually getting up and running for that receiving piece. Just to be operational 24/7, to have procedures in place for planned maintenance, etc., where you can bring things down but still remain fully reachable on the instant payment scheme, which is what the legislation mandates. So I would be planning now. I would be getting ready with that in mind. That will sharpen as we progress over the next few months in terms of a firm timeline, but I think getting ahead of the game now is key for all participants.
And I think I just want to echo that. That's most certainly the sentiment and the direction and the movement and the advocacy from a BPFI perspective. The time is now. The majority of our members' projects are mobilised. So if they aren't, they should be. This is a significant scale project, and we're obviously supporting our members moving along that journey. But I don't think there's an option to wait. We have to use the information that we have, just given, as I said, the scale and size, significance, and the tight timelines.
So most organisations are already, sort of in flight, but if you're not, you need to get on with it, I think is the message there, isn't it? So maybe, guys, just an open question to both of you. There's a lot of change, there's a lot of dynamics in our financial services market at the moment, new entrants and, some firms leaving Ireland. So with the arrival of a much sort of increased uptake of instant payments, how will that change things? Maybe Gill, your views.
Yeah, I think we outlined initially the opportunities that instant payments can offer the industry from a consumer, business, and a PSP perspective. I think the changes and the updates in terms of what's included in scope, given the process of the legislative process, in terms of the Settlement Finality Directive and that's inclusion now, and the SEPA Instant proposal, means it's opening potentially it's opening the SEPA schemes to the e-money institutions and the payments institutions. So I suppose from an industry, banking, and even a European banking perspective, there is going to be increased competition, which is welcome, and there is that's certainly what the Commission are looking to do, to increase competition.
Yeah, I think just generally from a consumer and from a business standpoint, over the last number of years with the COVID pandemic and so much of the activity taking place online, from Zoom meetings to buying stuff on Amazon and having tracking numbers and seeing where it is and when it's going to be delivered, and everything is now, everything is instant, it's always on, it's fully available and ready, and payments has always just been a little bit different to that reality. So I think in a way this is very much aligned with where society is today in terms of expectations. If you're out on a Friday night and want to split a restaurant bill with friends, with SEPA Instant Payments, it's easy to do so. And I think more, generally speaking, with SEPA Instant Payments, with some of the open banking initiatives that have been coming about, I think there is seismic changes happening across the European payments landscape today. And one final point, aside from the consumer and business perspective, from a fintech perspective, this is a really big deal. For years, fintech have been lobbying to get direct access into the payment systems. Today, if they want to access the payment systems, it's through correspondent banking relationships, and it's always been a case where can we find a home, and it's trying to onboard to a bank and going through that very particular set of onboarding requirements, risk appetite, etc., etc. So I think with the update to the Settlement Finality Directive, the opportunity for fintechs to connect directly into the European Central Bank, to be a direct participant in the SEPA schemes, to be able to clear and settle directly with the European Central Bank, I think that is a really, really welcome development for the fintech industry.
I think it's a really exciting moment to drive innovation, isn't there? There's going to be a lot happening, so that's definitely welcomed. I think you both mentioned something around sort of the costs, right? In terms of there's a lot to do, right? But the legislation requires there be no additional cost beyond current fees, right? So how does that equation work, right? How are those costs being absorbed by these organisations? Maybe Gill, your thoughts.
There is no compensation model for the PSPs in this, unfortunately. The consumer won't be charged, absolutely, as you said, Owen, the consumer won't be charged more for it. It definitely was a question that we posed to the Commissioner and the DG FISMA, etc., in Brussels over the last couple of months. And from their perspective, they perceive that the benefits in terms of operational efficiencies that PSPs will receive because they are processing payments in real time, and the opportunities that they can avail of in terms of an instant payment will eventually outweigh the initial cost. I would say it's probably challenging for maybe some PSPs to realise that at the moment, and to kind of see that cost benefit analysis, but that is the longer term, I suppose, perspective from the Commission.
Thanks, Gill. Tony, are there other considerations in terms of how all of this change needs to be absorbed?
Yeah, certainly, Owen. I think, again, it's a fundamental migration from one operation to another. So traditionally with, SEPA credit transfer, SEPA direct debit schemes, which have been up and running since 2008, 2009, it's always been settlement accounts that you hold as the bank with the European Central Bank. It's about having sufficient funds in place ahead of that transact activity going through, etc. But with instant payments, that doesn't work, particularly when you consider the operations team and liquidity management teams will be there during working hours only. So what happens if there's a big spike in activity on a Saturday morning? You need to be able to accommodate that, because it's not good enough for instant payments to work 99% of the time, or 99.9% of the time. They need to work all the time. So in order to manage the 24/7 nature of instant payments, the liquidity adjustment cycle is a fundamentally different way of working with instant payments. And with the liquidity adjustment cycle, there's upper and lower ceilings, and the banks would then operate within that parameter, within those upper and lower ceilings. So there's a lot of work, there's a lot of consideration that needs to be done by institutions onboarding to instant payments around how the liquidity management piece is going to work. And then I think from an SME and consumer perspective, by simply moving from batch processing Monday to Friday 9 to 5 into an instant payment, you don't have funds that are locked up in the back office. So that's to the tune of 200 billion euro on any given day is being freed up with just that move from batch to instant. So that's going to be a real benefit to small and medium-sized businesses and consumers.
Very interesting. There's a lot to do, isn't it? It's such a broad topic. Maybe, Tony, just continuing on there. So, you're advising many clients in this space. If we were sat there looking at someone's roadmap of what needs to be done, like what are the big ticket items that you'd expect to see on there?
Yeah, I think first and foremost, the environment. How are we going to support something 24/7, 365? How are we going to deliver this within the tight timeframes that we have? I think one advantageous position to consider is that there are lots of banks across Europe that KPMG have assisted already through our European Payments Centre of Excellence. And through us assisting banks on those journeys, the lessons learned have been taken on board and noted, have been refined, and they are learning certainly that we can bring to market in terms of best practice. What are the big areas, hurdles that need to be overcome, etc. But for me, the big ticket item certainly is the 24/7 cloud availability or service availability, the liquidity management piece. Operational resilience, I think, is another key area that clients will need to consider. And finally, I would say the customer experience, having the customer front and center, thinking about the customer experience in the context of all the elements that make up this proposition, the authorized push payment fraud, the name and IBAN matching service, how that's going to be managed, the reachability element as well. Like, Owen, if you bank with a certain institution and I try and make a payment to you, I will know from the outset whether your institution is reachable on instant payments or whether it's not instant reachable. But in terms of your specific account, there is no visibility from the sender side or from a scheme side. That needs to go all the way through to your bank, and they need to say, yes, this account is reachable, or the account doesn't exist, or end customer deceased, or whatever the reason is. That was a terrible reason code to give.
Yeah, we hope that's not the example, but keep going, Tony.
Yeah.
At least to the end of this podcast, I might make it.
Yeah. So I do see room for further enhancements in the future where there is visibility over the state of that end account. And there are lots of tools and players in industry who have developed various methods of increasing straight-through processing on payment rails. And we can see that those could potentially be enhanced in the future to incorporate that functionality to give as high straight-through processing rate as is possible.
Guys, we've talked a lot about SEPA Instant Payments. Is that it, or what else is coming down the track, Tony?
Yeah, no, certainly there's a lot of balls in the air at the minute on. So I think over the last 5-10 years, there's been more innovation and more movement in the European payments landscape than at any other time in its history. So looking at those balls that are up in the air today, we have, aside from SEPA Instant Payments, clearly, we have the new PSD3 and PSR. So in 2015, the second iteration of the Payment Services Directive was released, and that was really the genesis of open banking in Europe. On reflection and taking learnings over the last 8 years, draft legislation was put forward in June this year by the European Commission around what they call an evolution rather than a revolution with the Payment Services Directive. So really the Payment Services Directive is ensuring quality of APIs, which is how the banks talk to one another and share information with open banking third-party providers, AISPs, which are the account information service providers, the payment initiation service providers, also how they can communicate with one another in a standardized way, just to give that drive, again, that uplift with open banking. And then you throw in on top, there's the exploratory phase, which is progressing with the European Central Bank around considering a digital euro, a central bank digital currency, a CBDC. And just last month, it moved into the next phase. So it really is a question of when rather than if we will see a digital euro.
I think that's a really key one. And there was a central bank conference last week where our governor said exactly that, Tony. It's not a matter of if, it's a matter of when. And the key kind of high-level aspects of the digital euro, as I see it, in order to understand what it means at this stage, is it'll be mandatory for every PSP to offer or to distribute the digital euro, and it'll be mandatory for every merchant to accept digital euro. So that is massive. It's not just on the banking and the PSP communities, but on all retailers and all e-commerce sites, etc. So it is a couple of years down the line, but a significant program and piece of work, and something that we need to be kind of working towards. In additional to, I suppose, the EU policy side of things domestically, there's a lot of movement in the payment space as well. Probably first and foremost is the national payment strategy. So Department of Finance are opening a public consultation on the national payment strategy, I understand, next week. They will be encouraging everybody, so it's an open public consultation. They'll be encouraging everyone to respond to that consultation. The areas that they're looking to cover in the national payment strategy are kind of threefold. One is access to cash, which again is another very topical agenda. The other is acceptance of cash, and then the third, which is more broader, incorporates the full payment landscape. So probably the future of payments. So I think watch the space on the national payment strategy. That will be a keen one of interest. And then I suppose another part and priority agenda item is access to cash as well. So the Irish government are moving in drafting legislation to protect and maintain access to cash levels in line with the EU, because we mentioned the digital euro, but the Commission actually published the digital euro as a single currency package alongside the legal tender of cash. So it's digital euro and cash published as two separate proposals, but all in the same package. So Europe are moving in the direction to, yes, progress digital euro, but it will complement cash and not replace it. And they're looking to, I suppose, legislate to ensure access to cash is maintained. So yes, very busy times in the payments world.
Yeah, really interesting progression as we see through that. Maybe just to return back to SEPA Instant Payments, Gill, perhaps you could wrap it up for us. So what are the key takeaways?
I suppose to understand, as Tony was saying, the requirements, and then to interpret what those requirements mean to your business, because they are significant in size and scope. I think Tony has outlined them really articulately and clearly. There, I think the only thing I'd add in terms of real-time processing and not batch processing, and there can be no underestimation of how challenging that is going to be for some institutions. I think in addition to that, the fraud aspect and the name and the IBAN matching solution, there are a number of solutions that are live already across Europe, in the UK as well, in the Netherlands, for example. But each PSP is going to have to potentially engage in an RFI or RFP process with a vendor to provide that name and IBAN matching solution. That solution will have to be interoperable with every solution across Europe, and that provider or third-party solution will need to have a solution that is in line with standards that the European Payment Council are currently working on. So there is no pan-European IBAN and name matching solution out there yet. So that will, the standards will progress, and those solutions that probably exist, and maybe new players in the market as well, will offer a solution to meet those requirements. But that is a significant undertaking, and it'll be a significant portion of the programme. I was going to say project, but it's a programme for many PSPs. So I think we outlined it, already. Even though the legislative final text is not published, it's understanding what the requirements are, mobilising, ensuring the projects are mobilised, and that you are ready to receive and send instant payments by the mandated deadlines.
Thank you very much. It's a significant opportunity, isn't it? There's lots of innovation that will come from this, and I think your message about people should be either in flight or getting on with it, right? I think that's really important for people to hear. So that leads me just to thank you, Gill, from BPFI, for all of your excellent insights and support in the industry, and Tony from KPMG, thank you very much.
Lovely to be here. Thank you.
Likewise. Thank you, Owen.